Batsplaining. And I'm back. You're welcome. Today we're diving into the Form 1040. I know this is going to be as painful as taking a can of bat repellent to the face. No other person could have written our tax code other than the Riddler. The constant fluctuations from vague explanations to hyper-specific gobbledygook makes even those who deal with it every day beg for Arkham. This is the worst document ever made, and there have been some doozies. We sign our hard-earned money away to be frivolously spent on things that we do not benefit from, do not care about, do not support, and over half the time don't even know about. Whatever. It's broken into four main parts. We've got income, business expenses, deductions, and finally, credits. Income is where we list all of the money that we made. Leave nothing off. Wages, commissions, tips, overtime, bonuses, rent, interest, dividends. You can leave the birthday and Christmas gifts off, but everything else, even if you have federally tax-exempt income, you still list it, just on the tax-exempt line. Remember, if you get a tax document for it, the IRS did too. Nothing will get you flagged for an audit faster than your income being less than the amounts reported on your W-2s, 1099s, etc. Don't be stupid. Next, we have business expenses. This is primarily for businesses to list those expenses that were incurred in the process of earning the income above. This used to be a lot more useful for the average person because there were expenses that could be taken in the process of W-2 employment, like travel between locations, supplies purchased for work, or even the cost of license renewals. But these don't really exist anymore except for certain jobs. In exchange, the standard deduction was significantly increased. And if your company doesn't suck, they'll reimburse you for all those costs. Now, if you have an incorporated business, you may have to file a separate document for this stuff, and you have to do it by March 15th, depending on your business structure and the way that you elected for your entity to be taxed. But for you subcontractors, sole proprietors, and incorporated businesses filing as a sole proprietor, this is your playground. You need to be able to substantiate everything you put here, so have your receipts ready. Also, you need to be able to prove that the expense was exclusively for your business purposes. You can't just go buy a bat boat or a bat plane for yourself and write it off unless you run a business that uses that boat or plane more than 50% of the time exclusively for business. Why do you think I have so many? Office rentals, home office, now there's some hefty limits here. Employee wages, depreciation on equipment, the list goes on. We've made it halfway through the document, which is pretty sweet. We subtract our business expenses from our income to get our adjusted gross income, or AGI. You know I hate acronyms, but I am going to use this one for this because it's a mouthful. AGI is used to determine not only the qualifications for several of the items on the rest of the list, but also several government programs. Now, we're going to move on to deductions. Here we pick the larger of the standard deduction or the sum of our itemized deductions. Most of you will be choosing the standard deduction since for 2025 it's $15,750 for single filers, $23,625 for heads of household, and $31,500 for married couples. And if you're over 65 and or blind, it's even higher. Yeah, that's right. Not deaf, just blind. Most of the itemized deductions have certain limits or exclusions that guide how much you can deduct in each category. For example, charitable giving is capped at 20 to 60% of your AGI, depending on what you donated and what entity you donated to. Another example, Medical expenses only count those expenses that exceed 7.5% of your AGI. For example, your AGI is $100,000, but you had surgery that cost you $10,000. You only get to deduct $2,500 of that surgery. If you do exceed the standard deduction with your itemized deductions, that is because you spent a lot more money. If you and your neighbor are single and she has 0 itemized deductions and you have $25,750, yeah, you get to take $10,000 more in deductions. But you had to pay at least $25,750 more in expenses to get it. If you have expenses because you have to have them, then go for it. But in general, do not incur expenses just to lower your taxes. You're wasting your money. Remember, credits are always better than deductions. Deductions reduce your taxable income dollar for dollar. That's the amount that your taxes are calculated based off of. On the other hand, credits decrease the actual tax that you owe dollar for dollar. That's the amount after the calculation. After getting your deductions together, you subtract them from your AGI to get your taxable income. Then you get the wonderful opportunity to run that taxable income through the tax brackets, but make sure you get the right one based on your filing status. Now, really quick, I need to explain the tax brackets because there's a lot of confusion. The biggest misconception is that if your income falls in the 22% bracket, that means you pay 22% for taxes. It's not the case. Think of the tax brackets as more a series of buckets lined up. You pour your income first into the 10% bucket until it fills up. Then it flows over into the 12, and then into the 22, the 24, and so on. You pay some at 10%, some at 12%, etc. I think you get the idea. After running your taxable income through the brackets, you should have an amount of taxes that you owed. But don't forget to subtract out the taxes you already paid through your withholdings from your paycheck or through quarterly tax payments if you did them. Next, we get to see what credits we qualify for. They often have thresholds, AGI or income caps, only for those with dependents, work requirements, or all of the above. You should try to qualify for as many as you can. To determine your refund or how much you're going to owe, you need to subtract the credits from your tax owed after withholdings. Some credits are known as refundable credits. That means you can take that refund, or at least a portion of it, even after all of your withholdings have been refunded to you. Let me give you an example. You have $5,500 withheld throughout the year, and your total tax after all non-refundable credits is $2,000. Well, $2,000 minus $5,500 is $3,500. You get a $3,500 refund. But you also qualify for $3,000 in refundable credits. That brings your total refund to $6,500, even though you only paid $5,500 in tax withholdings throughout the entire year. In other words, refundable isn't necessarily a refund. It's more like a government stimulus check. Credits are a way the government rewards what they deem to be desirable behaviors, like having children, being working parents, among other things. Refunds and credits nowhere near cover the cost of the behavior itself, but it's a way of easing the burden. The problem is when bad actors abuse the credits to fraudulently claim unearned benefits. Some examples are claiming defendants that aren't yours, claiming you have income from employment that you didn't have, etc., in order to check the qualifications to get some of this money. Fraud is illegal. It has no statute of limitations, meaning they can come and get you at any point, even years later. And it carries incredibly stiff penalties. Plus, I don't want to have to come after you. So, Don't do it. It isn't worth it. Look, for example, the IRS can see that both you and your ex are claiming your child. It's not that hard. How's this for instant karma? A guy had been waiting 3 years to get his Social Security disability for a legitimate reason. But he had his case thrown out when it came up for review because his cousin convinced him to claim that he had made money on his taxes just to get some free money from the IRS. Well, talk about a rock and a hard place. Does he admit to tax fraud in order to get his Social Security benefits? Or does he just tough it out? Ugh. If you'd like me to do a video that goes over the intricacies of some of the most common credits, let me know in the comments. Otherwise, I'm going to dive into the more complex components of the 1040. Things that help rich people like me pay less taxes than you. Yeah, you heard that right. And then we'll transition to the elements that were put in place to prevent that from happening. Batman out. Thank you so much for watching this video and for supporting all of our channel. Please like, subscribe, and share this video with a friend. Alright, bye for now.